we did an investor survey for real assets. It is predominantly real estate. It's termed real assets, but there may be a bit of infrastructure input. And really just to see how ESG is integrated into the investment life cycle and whether people believe they're leaders, laggards, and what that actually looks like. So we had 121 respondents, which was discrete companies, which is absolutely fantastic. I think for the industry, it's superb, representing about 2 trillion of assets, which is around about 10% of globally managed assets, very much European focused. And I'm going to share with you just some of the highlights. Interestingly, around about 1/5 of the 121 respondents were actually asset owners. And I think that's fantastic. It may seem a low number, but actually to get the investors involved in this and see that as really important, I think just recognises the importance that investors see in the ESG agenda. And we see that, and I think the investors managers would agree that they see the investors putting more and more pressure on them to treat this as a fiduciary duty and take this forward. Not surprisingly, the fund managers are high up there, and then sort of equal amounts between asset and ESG professionals. And probably not surprisingly, with 121 respondents, not all of them have their own leads in ESG. With regards to assets under management, almost half is more than 5 billion under management. And this is great to see, so it's got a really good representation and shows such an interest by those who have large portfolios. And about 3/4 more than 1 billion under management. And then geographically, as I said, this has been predominantly European focused. There is a bit of a mix. As an organisation, EVORA is moving into North America and Asia next year, and as a consequence, we hope that we'll have a more global representation when we repeat this. But thank you to all those who have responded. So to kick off, really what I want to start off with was the impact on regulation. And what's really interesting here is that 100% of respondents said that regulation was really important to their decision making. And 55% said it was on more than one level. Notable that for the bigger players, that's in the sort of the purple, dark blue, they see the fund and the corporate sides as more important. And I think that's really the emergence of things like TCFD and SFDR, the Sustainable Finance Regulatory Directive, that it's driving the portfolio importance into decision making. That doesn't mean that the asset level isn't important, and we can see across the board that is important. And I think actually that was highlighted back in July, both for British Land and Landsec. Their share price was hit by about 4%. And that was representative of the concerns over they're getting their buildings to an EPC-B rating by 2030 and the associated cost of doing so. I think also it's really important just when we start to think, about how the funds are representing themselves, and it was notable as well, just to highlight, DWS, not from a real asset perspective, but across the piece. Their share price was really hit in August, fell by 14% overnight after an SEC probe just on ESG claims that we were making over how sustainable their investments were. And their share price has not fully recovered, it's still 10% down. So the importance on regulation is fairly obvious, I feel. I think when we start to see, what's the impact overall on value, 93% of respondents said that value had a direct implication to the ESG agenda. That's a broad comment to make, but I think what's really interesting here is that when you look at all the different categorization, the lowest is 43%, and we're not in single digits, so everything is being taken really seriously now. Notable reputational risk comes right at the top, and I guess after we've seen some of the hits on share price, not that surprising. And I think there's going to be a lot of peer pressure. And I don't see that as an issue either. I think we're going to start to hopefully see some greater momentum, maybe a bit of an avalanche, and that transition and that concern over reputation, especially with the institutions, is going to be quite significant. I think on top of that, we start to see the impact and concern on leasing. And again, I think there's a recognition that from an occupier perspective, there will be a change in behaviour. And it was great. It's interesting, actually. It's a bit of a gold standard, but we were at CADWorks last night where UK GBC was, and thank you to Basil at 4 for letting us be there. But a beautiful, sustainable building. But from talking to four who own the building, it's when you look at the credentials, we're getting the highest rent, 15-year leases, and really high covenant strength from tenants. So there is a driver that way. Interesting that still, financial issues slightly lower down, but still high. I think the cost of retrofit is going to be high on people's agenda, impact on cash flows. When we look at the overall impact on how ESG is actually integrated into investment firms, some interesting criteria was evaluated here. And again, the percentage is really high. I mean, 85% said they use ESG for investment decision making. That's fantastic to see. 75% they were training their investment professionals in ESG. Also really notable that they said 40% had ESG representatives on the investment committee, on the investment decision making, and they had voting rights. Now, I said we had Chatham House rules, but one notable thing in one of our round tables that we heard was that there was very rarely a red line for any ESG event. So for regulation, yes. For going over budget, yes. But again, we have to be realistic here. I guess there has to be application of capital. Product can be sometimes difficult to get hold of, and it can be very competitive. So it's going to be interesting to see, are we going to see an evolution that rapidly changes that, where ESG decision making in the IC is going to have a major implication. The final point, which isn't here, which is fascinating, I've got on screen, 41% of investors said they were market leading in ESG. Indeed, I've had a few titters from the audience there, hopefully online as well. Didn't specify what they meant by that. I'm going to come back to it. ESG data. You cannot have any presentation without data. And data is messy, as is this slide, so I think that's helpful. But what are we looking at here? I think interesting that probably the biggest challenge in the industry is to get good, complete data. And it's notable still that, the biggest survey and submission assessment that's done, which is GRESB, the majority of the points still reflect coverage of data. Not necessarily quality, but certainly coverage. And it is still a challenge within the industry to get data. I think notable points, 97% of energy data is being collected, apparently. That's what the view was. But of that, 85% of the respondents said they didn't trust the data, which I think is, it's scary, but it's something we must take into account. Because if we're saying that investment decision making is being aligned with ESG data and it's not trusted, where does that take us? And I think the other point to note here is that to drive the quality, we need automation coming directly from the utility suppliers. And at the moment, only 5% is automated. When we start to look at integration into the ESG life cycle, again, really high percentages. So fantastic to see just the engagement by all of the respondents here, and especially for investment decision making, and also the operational ownership, the management of the buildings. But I guess, is this really reflecting the capital allocations going into ESG and the impact that we're seeing? Something, again, that we can put to the panel later. Finally, from the point of view of what is really important, it was notable, again, that rather than a green building or investing in the green buildings, the most number one priority was where to invest. And the impact clearly that people see of climate change, extreme weather conditions, social economic impact, as to the first point, geographically, where should we invest going forward? Other points you can see, which were important, was the sustainable property management, the operational management to make sure that it's appropriate for the occupiers. But notable, the number one is location. Finally, with regards to what is being reported on, as I said, I think GRESB has been certainly a force for momentum for change. And it's been going for 12 years now and has really driven the industry to make good progress. And I think everyone would agree that from the investor's perspective, they see this as a representation of performance. I think we have to be realistic and actually say, this is more about the controls and systems that are put in place at a management level, and probably more about coverage of data than for performance. And there are other reporting standards coming up, and I think, SFDR, the initiative that came out in March, is going to be starting to look far more at how funds are positioning themselves and defining with transparency how sustainable they are. And I think the Task Force for Financial Disclosure on Climate Issues, the TCFD, again, is going to be a force for change as well when we have to start having that transparency. So I've summarised all of this into, which I think is quite a fascinating slide. So out of 121 respondents, 2 trillion of assets, predominantly Europe, as I said, we are looking at, I'll just pull up I've got broader stats here actually, which is interesting to look at. 75% say they use ESG data for decision making. 41% think they are market leaders. 87% integrating ESG into investment decision making. 74% say it's going into operational management. 40% saying there's representation on the investment committees. But I guess, contrary to using that data, only 5% of data is automated and 85% are concerned about quality. But notwithstanding that, these are high percentages. So I want to challenge the audience, the panel, to say, what does this actually mean? This seems to be a force for good. So much emphasis compared to a few years ago. These aren't single digits, these 70, 80% saying that ESG is being taken incredibly seriously in the whole investment life cycle and investment decision making. So if that is the case, does that mean we've got nothing to worry about? Actually, our profile to net zero is set. It's going to be, forget 2050, maybe 2030. Does it mean we've already adapted ourselves to climate change? Our buildings are already resilient? Or are we delusional here? Or is this more about where the mindset is that this is serious and there's an evolution that still needs to happen to turn that good intent into action and capital flows?